Good morning, Predicted Trades family. Hope everybody's doing well. Happy New Year to everybody. Hope you all had a great holiday, had a great break, and hope everybody's ready for a fun new year. So for a quick review, to end out the year, we were pretty much stuck in a range between that 3,800 and 3,870. While we did get above it a little bit during the overnight sessions, during the cash sessions, we were pretty much pinned between the 3,800 and 3,870. And now we can see we're about to open a little bit above that 3,870. Also, the daily 8 has caught up to that same number. So basically looking for that to try to be support today. It was resistance all last week. Let's just update this a little. There we go. So for today, basically looking for ES to try to hold above 38.55 on any kind of dips. Really more like 38.60, 38.70. I know we're going to be opening right around our key level at 38.78. And as you can see from the overnight session, we opened up near 3,900, gave it a tap, fell to 38.43, our key level, and caught a bounce. I was actually hitting some of these futures last night, and when I saw us open up way up here, opened a short back with the target, in my mind, of 38.43, just because it's what we were at last week. We fought above it end of the day on Friday, and we had interacted with that zone all week pretty much. Well, actually the last 2 weeks. We pushed off of it to try to head up to the mean. Then we'd come back, try to push off of it again, come back, fall below it, get back above it. Ultimately, it's a key zone. So last night, yep, shorted down to that 38.43 and then went long off of it with the target of 38.78. That target got filled overnight while I was sleeping. And you can see we fought all the way back up to 3,900, got through it a little bit. Now we do have the mean, the daily 21, sitting right at 3,900, whereas it used to be up above. And every attempt to try to get to it got pushed back down. So now we are arriving at the daily 21. As it's come down to meet recent highs, we have our daily 8 below, so we are at big key liquidity levels. Just above our daily 21, we have the daily 50 at 39.15 and a big key level 39.22. So if we can hold today, and I'd accept a little dip down to this zone around 38.60, 38.55. And then, as long as we hit that and then get right back above the daily 8, this 38.70, looking for a long up to 3900, 39.15, 39.22. But if we start to lose at 38.70 and can't hold this 38.60, 38.55, then it'll be back down to 38.43, 38.30, where the bottom of a 2-hour squeeze sits right near Friday's lows. Should that give out, then it's back to that 38.07, 3800, where the bottom of a 4-hour squeeze sits, which is, basically near the lows from the last couple of weeks. But if you see, we do have a nice inverse kind of head and shoulders going on here off this 38.07 and a half. So let's see if we can hold up and try to keep pushing out of this range that we were stuck in. Get through our recent highs near that 39.22 and try to push up above all of our daily moving averages. Otherwise, if we start to lose that 38.70 and the 38.60, we are falling right back into this wedge that has been getting tighter and tighter in this same zone that I've talked, or the same range that I've talked about, that 3807, 3870. So let's see if we can hold above the wedge and start to push higher through recent highs, or if it's back down into consolidation. Also, looking at our chart that I always love to check in on with the 45 EMA from all the intraday time frames. We can see that we were below all of our 45 MAs, and they were bearish in their orientation, so every time we would get to them, we'd reject. Get to them and reject. Well, now today, we have fought above those MAs, and as you can see, the bottom of those MAs are right around that 3860. So again, using our 45 MAs, it's the same premise. Can we hold above 3860, at the very worst 3855, little dip, but then want to see us get back above, hold all of these moving averages as they're starting to cross each other into a bullish sentiment. If we can hold all of these moving averages and start to get back above this little pre-market high here of, sorry, not the pre-market high, but this lower high. So if we can hold our MAs, start to get through 3885, then it's looking for a push back up to the overnight highs and up to that 3922. We do have a 4-hour squeeze right near that 3900 squeeze top, but it is getting pretty thin. So it's easier to get through the thinner that they are. Yep, I think that covers ES. We can move on to NQ. Yeah, we'll get to this when we're talking about SPY. For NQ, we got back above that 11,000 and trying to hold at this 11,068. At the very worst, want to see us hold 11,000 if we do dip down there. Sorry. So at the very worst, want to see us hold that 11,000 if we do have a little dip. One thing to note that I didn't cover on ES, but we want to look at what we got for the overnight highs and lows. That kind of sets the range for the day. On ES, overnight low, that 3843, high around that 3906. So that's the range we'll be stuck in, and we want to play off that range until the range breaks. So for NQ, our overnight low got down around 10,950. If we can dip down and hold 11,000 and get right back up where we are above 1150, that's still looking bullish to try to push off of this daily 8 and continue up to that 11,200 key level, and then up near 11,300 we have the daily 21, daily 15. So looking for NQ to try to hold the daily 8 and move up to the mean, just like ES has pretty much arrived between the daily 8 and the mean. So let's see if the 8s can hold us up and get us to the 21s. If we start to lose that 11,000, then we're just coming back into last week's range, down to that 750, with key levels at this 890 at the bottom of a 2-hour squeeze, and that 950, which was pretty much our overnight low. So if we start to give out 11,050, we'll come down to test 11,000. Want to see us bounce up quickly. Otherwise, we're coming down to test 950 and 900, Friday's lows. Ready. So the ready has arrived back as well at the daily 21, daily 15. Let's see if it can hold above 1780 and this daily 15 to try to get through the daily 21 and up to 1800. If we start to lose 1780, let's see, I'd accept a dip back to there we go. About this 1770 and that overnight low of 1765. If we are going to dip below the daily 8. But if we can hold up above that, and even if we even do get a dip down there, since we are on a nice little gap up, they might want to just bring it back a little bit to fill that gap, which now, on most of these indices, the daily 8 is overlapping where we pushed up to on Friday. So if we do get back to fill the gap, that'll be like coming down to tap the daily 8 and get back up to the 21 to push higher. And if we start to lose that daily 8, the 1770, then it's down to test Friday's lows at the bottom of the 2-hour squeeze. On YM. Same deal. Stuck in between the daily 21, daily 15, daily 8. Also have the daily 50. So we've got a zone below of daily MAs and a zone above. So definitely going to keep a tight eye on YM today. Should we dip down and start to lose 33,300 basically, we are losing our MAs below that should be support now that we're above them. And so if we start to lose that 33,300, then we'll probably come back to test the overnight low and maybe down to Friday's lows near 33,000 at the bottom of these squeezes. Basically we're in a wide 4-hour, 2-hour squeeze on all indices. We are near the top with our moving averages trying to be support. So as long as we can hold those moving averages, expecting us to try to push against the top and continue through our overnight high. But if we start to lose those MAs, you can see that daily 50 pretty much right in the middle of the squeeze. We start to lose those MAs and fall back below filling the gap, that we need to start thinking about getting down to the bottom of these squeezes. But if we can hold up in the middle, right at support, and basically where we close, looking for a bounce and continuation on this uptrend as we're starting to get through our MAs and flip them bullish. So on to Apple. And as we go through the individual names, you want to try to note on the push at the end of the day Friday what was getting accumulated during that push. We might find some of these names did not make as hard of a press up or get out of their range, while other names did. So for instance, Apple did a great job at end of day getting above the range it was stuck in, closing near that 130. Now we're gapping up near this 131. So on any dips, want to see us hold 130 to fill the gap and continue up above 131, 131 and a half to try to get up to our zone above at 132 and a half, 133. We have the daily 8 right near our pre-market highs, and the daily 21 and 15 sit up above at 135, 136. So, simple premise for Apple this week. If we can hold 130, looking to push up to the first zone near 133, and then the next zone near 136 to get a full reversion to the mean. If we reject and start to lose 130, then we're just slipping right back down to these key levels that provided support last week. That 127.3, 128.5, 129. So let's see if Apple can hold above 130. That would definitely lend to the upside and continuation on this little push that we got. Moving on to AMD. As you can see, last week we were just absolutely stuck in a range between 65 and 62. Did a great job pushing up and closing near 65, now opening up right near our key level, 65.5. So looking for us to try to hold right around there and pre-market lows. If we start to lose that, we're coming back to fill the gap, back to this daily 8. Near 65. But if we can bounce there or hold up above pre-market low, looking for some continuation and to get up through pre-market high near the daily 15 and continue up to 67, 67.5 where the daily 21, daily 50 sit above. Amazon. So on Amazon, our pre-market low basically got back to fill the gap. So we have support, basically around that 84 where we close, where our pre-market low dipped down to. So looking to hold above 84, push through 85, 85.5, our pre-market highs, to get up to 86.5 where the daily 15 is, and 87.5 where the daily 21 sits. Basically recovering back to some of these recent highs from 2 weeks ago. And obviously if we lose that 84, then we're coming back to this 83, 82.5 Friday's lows. I guess I'll cover BA real quick. So very much stuck in a range last week with a ton of tight squeezes, but on Friday pushed through a number of them and fired everything below the 4-hour squeeze. So sitting at the top of this 4-hour squeeze, looking on any dips to hold above 191. 190, this little zone that was kind of holding us down all week. That should now be our zone of support to try and get through our pre-market highs and push up to recent highs near 195, 196, 197 in an attempt to try to get up to 200. And as you can see, BA has been holding above bullish stacked MAs. So BA is trying to hold up well and push this market higher. So definitely keep an eye on it. The 195s and the 200s this week could be a decent trade if BA continues up. Cat. Okay, I really defended this 238. Now trying to open up above 240. See if it can hold 240. If not, coming back to retest 238 before trying to go higher. And just like BA, Cat has been very bullish stacked MAs and holding above them. If we can get going to the upside, looking to take out 242 in an effort to get back to 245, 246.5 key levels above. But if we start to give out 240 and that 238, the daily 21 sits down near 235.5, 236 at the bottom of that 4-hour squeeze as we are trying to push through the top. Google. Google back above the daily 8, which it has been resisting for a couple of weeks. So let's see if we can hold above 88.5, basically kind of where we closed. 88.25, 88.5 should be support if we do have a little dip. We are about to open near our key levels at 89, 89.5. So if we can hold there or that 88.5, that daily 8 on any dips, looking for us to push up through 90 to get up to 91 where the daily 21 sits and recent highs. Yeah, obviously if we give out that 88.5, 88.25, then we'll likely be coming back into the same range we were in last week, which spans basically from 88.5 down to 86. Take a quick look at finance with GS. GS was definitely held down from this trend line. Looking like we're going to be opening a little bit above it. So let's see if we can stay above 343.5, basically kind of where we closed on Friday. We have the daily 8 at 345. It looks like we're going to be opening a hair below that. So for GS to get any upside today, looking forward to get above 345, turn that into support, and try to push off of it to try to get up to 350, where the daily 15 sits, 353, where the daily 21 sits. But we do have some squeeze tops in the way that will hold us back, make it a longer journey, right? If we start to lose that 343.5 on any dips, then we're likely going to fall back into last week's range, which spanned from about 340 up to 343. So let's move on. Meta. Held up really well last week, above moving averages for the most part. Had its big push up on Thursday and then just kind of sat on Friday and then took off end of day. And we're getting up above 120, so on any dips, want to see us hold 120, 120.5. We also have our pre-market low there. Or maybe that's, that's Friday after hours low. So want to see 120, 120.5 hold on any dips. Upside targets, pre-market high 122.5, key level of 123, also recent highs. And then past that, looking to push up to 125, 126 up on the top of this daily squeeze. If it can get continuation, looks like a 2-day squeeze is forming up near 128. But if we come back and start to lose 120, 120.5, we do still have our daily moving averages down below 118, down to 117. So you'd want to target that should we start to give out and market rolling over to the downside. Microsoft. So as you can see, last week was just stuck in a range in between, let's just say 234 and 240. Back and forth, and now we are trying to open above 240. Pre-market low dipped right down to there. And we're above that daily 8, daily 50, with the daily 21, daily 15 up above. So just like the indices, we are pinned between our daily moving averages and trying to break out of last week's range. So on any dips, want to see us hold 240, 241, the daily 8, daily 50, and start to push up through the daily 21 at 242.5-ish. The daily 15 at 244 in an effort to try to get up to recent highs near 250. And if we can push past 250 this week, it'd be up to 255. Should we dip down and start to lose 240, then we're just right back into last week's consolidation. And you'd want to target Friday's lows near 236.5. And then that 234, 232, 234, 233 below at the bottom of those squeezes. Netflix had a big day on Friday. You know, while market was just kind of dipping and consolidating before pushing up late day, Netflix took off early, flagged, and then took off for more, and already arrived back at the daily moving averages. So on any dips, would love to see Netflix stay above the daily 21, which sits at about 295. If it starts to lose the daily 21 at 295, then we want to target the daily 8 down at 291.5. But if we can hold 295, looking for us to try to push up through pre-market highs, basically around 300, and get back to this key zone above around 307. The video. NVIDIA chips definitely lagging. MU reported, was it last week or the week before? I think it was it might have been before Christmas. So MU already reported in the new earnings season that is just kicking off. They actually didn't have terrible earnings or anything, but chips just haven't been seeing much love. But as the market is looking like it wants to try to push higher, let's see if we can see some rotation into chips. For NVIDIA, closed around 146 and trying to hold this 147.3. So you got a zone of support there. Between 146, call it 147. As long as we can hold above that, looking to get up through 150 where the daily 8 sits, 153 where the daily 50 sits to try to get to the daily 21 at 156. But if we start to lose that 146, then we're just slipping back into last week's range, and you want to target 142, Friday's low, and 140, near last week's low around 138.5. QQQ. So, QQQ looking decently strong. Just compared to recently, it's kind of been weak, kind of been a lagger to the upside. But overall, you can see this little zone of support that we created off of the Thursday before Christmas did provide some good support. We only got below it for a day. Then we opened right at it, took off, held it on Friday all day, and took off again. So should we give out and start to retrace into Friday's price action, as I keep saying, you want to target Friday's lows. That same zone is what you'd want to target. But overall, made a nice push on Friday and holding up well from this overnight gap up. Closed around 266, so if we do have any dips and start to lose, let's say 268, 267.5, you want to watch for the gap fill at 266. Looks like our pre-market lows were actually still above 267, so if we start to lose that 266, basically, if we go back to fill the gap and don't see a bounce, then we're going to just fall back to 265, 264, in that zone of support near 263. But if we can hold up above pre-market lows, hold up above this daily 8 at 267.5. Looking for QQQ to continue the journey up to pre-market highs near 270, and then push through to try to get to 273.5 where the daily 21 sits, maybe even up to 278 where the daily 50 sits near recent highs. And SPX. So we do want to mark that we did have a little gap up Wednesday to Thursday that we only barely tapped on Friday before taking off. So we left behind a gap and go. We did not completely fill this gap, and we're probably about to open in it. So in a way, we are kind of stuck between two gaps. On any dips, let's see if we can hold up at a gap fill, which would be 38.39. Let's see, we're about to ES 23 points up. So we're going to be up near 60. Okay. So let's see on, excuse me. Let's see if we do have a dip, if we can hold above 38.50. If not, on SPX, then we're starting to get back into filling this gap down that we had on Friday. And if we start to, get back to filling the gap and can't hold there, right in the middle of this Thursday to Friday gap, basically saying if we have a little dip and can't bounce out of this gap, then we'll probably come down to complete filling it back to this 38.30, looking for a dip there to try to get back up if we get down there. Otherwise, we're just falling back into last week's range, and we'll probably visit Friday's low, maybe even get that full gap filled from the gap that we left Wednesday to Thursday. But if we can hold up above this Thursday to Friday gap, looking to push up to the daily 15, daily 21, which sit right at 38.80, and then up to 3900, where the daily 50 sits at the top of the 4-hour squeeze. SPY. So on SPY, looks like we close around 382.5. Even our little pre-market lows here from this morning did not quite get down to fill the gap. So let's see if we can hold where we closed at 382.5. Some of these pre-market lows at 383. If we do get a little dip, looking to hold gap fill and pre-market lows and catch a bounce back up through 385. Get up to pre-market highs around 387, where the daily 15, daily 21 sit, and then see if we can continue up to 388.5, 389, where the daily 50 sits near recent highs. If we start to lose where we closed at 382.5, then we're likely just going to fall right back down to the key levels that we held on Friday, 381.5, 380. And 387. Or 378, sorry. Tesla. Just got beat up last week, down to 105, and then made its way back up to 120. Tesla gapping down while the rest of the market is gapping up. So, not loving this on Tesla. Just at least to me, it's screaming. It's not done getting beat up yet. They're not really accumulating. This was maybe just more of a cover bounce, some profit taking and whatnot. And, it's pinned between some key levels. Let's see if it can hold 112.5 or 115 on any dips. At the bottom of this little, what do we got? 1 hour, 2 hour? Yeah, 1 hour squeeze. So let's see if it can hold 115, 112.5 on any dips. Get back above 120 with the attempt to try to push to that 126.37 where the daily 8 now overlaps our key level. And if we can push higher than that up to 136.5. We do have the daily 15 at 140, daily 21 at 146. But I mean, it's going to need a lot of volume and accumulation, a lot of buyers to step in to try to break back up through this daily 8 to get to the 21. Basically just saying this one is still beat up and it might just need time to settle before they really start accumulating it. On to UVXY. We are down at the bottom of a daily squeeze, 4 hour squeeze, 2 hour squeeze. So for any upside today, we want to see UVXY try to get down below 6.5 and maybe start making its journey down to 6.2 and 6. But we do have some big fat squeezes in the way. Now UVXY does not need to continue to keep tanking for the market to go up. It could just settle, right? At the bottom of this daily squeeze, which would be just fine. But if we are going to go back to fill the gap, then we'll likely see UVXY hold above 6.5, start to push its way back up to 6.9 and 7, which would be filling the gap and getting back to Friday's price action. Moving on to VIX. So with market gapping up, VIX also gapping up. A little extra volatility with the new year, I guess. And VIX got up, higher than it did all last week, it feels like, on this gap up. So a little interesting and concerning maybe. Let's see, for upside in the market, I want to see VIX stay below 23.3, where the daily 50 sits. Reject and start to come back below 23 and start the journey down to 22.5. 22, where the daily 21 sits. We are at the top of this 4 hour squeeze, so forced to see some upside this week. I want to see us reject the daily 50, the top of this 4 hour squeeze, and start to make our way down to the bottom of this 4 hour squeeze, down near 20.75. But if we are going to roll over, fill the gap, and return to last week's range on the market, then we'll likely see VIX try to push through this 4 hour squeeze top, this 23.3, and try to get up to 24.5 near recent highs in the top of this daily squeeze. So that's it for prep today. Hopefully this was helpful for everybody. Definitely come check us out at Predicted Trades. If you aren't already in our Discord, you can join for free. And, this week we're going to be operating in our main chat so that folks can kind of get a feel for our service. We do have an end-of-year sale, New Year sale, whatever you want to call it, going on right now. So if you aren't already signed up, this week is your opportunity to test things out, get signed up, and then after this week the sale ends and prices will return to normal. So thanks for tuning in. Good luck today, good luck this week, and I will be on the chat, on the voice all week long, trying to provide direction. Just for a quick review, let me pull up SPY and talk about the game plan today. right near 385. I could see a little dip. If you look at this flag, kind of down to test that consolidation, which gets you down near 383. 383 was a big resistance point last week, and we even closed below it. So on a dip, looking for something like 383 to hold. 382 and a half, basically a 50-cent little zone of support there. And looking for us to try to get up to this daily 15, daily 21 near pre-market highs, maybe even push a little further to that 388 and a half where the daily 50 sits. Let's step down real quick. As we look over at one of my handy dandy tools that I built, you can see that we did get down to our this little blue cyan line on those pre-market lows. So again, on any dips, looking to try to hold there. And it just kind of sets the range, right? If we pop quickly to, let's say, 3.0, nice little dump here. Looks like we had some, oh man, now I feel foolish. I did not review the economic calendar, as we should do every day. So today we have PMI coming out at 9:45, so that's not what that was. A little construction spending at 10 a.m. Tomorrow we have some manufacturing data at 10 a.m. And then FOMC is the big one. Definitely going to be interesting what they announce right at the beginning of the year. Then Thursday, ADP, jobless claims, trade deficit, some PMI, more PMI, right? Then Friday, non-farm payroll, some more jobs data, some more manufacturing data. So we've got a big week for economic data, definitely tomorrow and Thursday and Friday, all with big releases. Interesting drop across the board and then right back up. Huh. Well, let's see. That got down to 382 and a half. That basically is your gap fill, the bottom of that wick. So, something to keep an eye on. Right now, our MA clouds are a little bullish and trying to provide support. But if we start to lose 384 and a half, then we definitely want to get ready to come down and retest where we've been basing at 383 and a half, 383, which was the resistance, the highs of last week, and 382 and a half, which gets back to filling the gap on that pre-market wick. You know, these kinds of wicks, I like to try to say either A, we're going to go try to revisit that, and it might be a slow grind down, or that was kind of the last folks getting their orders in, the last dark pool prints, let's say, before taking off. So overall, let's see if our MA clouds provide support at open and just keep bouncing us higher. If we start to give those out, then we want to target these lows. Right? We've set a base. We've got back above our MA clouds. They should provide support to push us higher. If they give out, we want to target retesting that base during the cash session and the potential gap fill. But that's it for today. Good luck, everybody, and we'll see you in the chat.